This is our Louisiana Department of Insurance Conference 2020, and it's a little different approach than we've had for the past several decades, where we had an annual health care conference. But this year we decided to expand it from 1 day to a day and a half, and to add all forms of insurance that are prevalent in the marketplace and on the minds of consumers as well as insurance professionals doing business in our state.
Now, the first topic was auto insurance. Tell us your feeling about that.
I feel very strongly about it. It is the number one crisis in our insurance market today. We've been through such crises in the past. We went through med malpractice, we went through workers' comp, we went through property insurance crisis after Katrina and Rita. Those have been fixed, but it takes legislators, it takes the governor, it takes us at the Department of Insurance, and it takes the citizens of the state to demand of their representatives that they fix broken systems. Our auto insurance system is badly broken. We have the second highest auto insurance rates in America, being paid by the 49th lowest per capita income drivers in America. That's really badly broken, and I do believe it will be fixed finally in this coming session.
I can tell you the auto insurance industry in Louisiana on the commercial side is collapsing. I mean, we really only have two companies left that will even write policies. I've heard of trucks and commercial vehicles going as high as $32,000, $35,000, where 8-9 years ago they were $12,000. So we're hemorrhaging badly in that respect. On the private sector, we do have options, but it's very high. We're the second highest in the country. We're about to be the first, because Michigan, who is first, passed a sweeping tort reform legislation last summer. So I have a feeling we'll own the number one spot. But I'll file an omnibus bill like I filed last year. It's going to be a little bit different, but it's going to take care of some of the areas where we're outliers in. We're going to have some rate reduction mechanisms in there, and I believe we'll get the cost down, and we get the cost down, we can get the rates down.
Very good. What about the jury threshold?
That'll be in there. We're 50,000 highest in the country by far. The second highest is 15. 36 states have 0. A handful of states have basically nothing. My bill would drop it to 5. And, I think that's something that is definitely would have an effect on lowering rates.
And finally, regarding seatbelts wearing in a car accident.
Well, in Louisiana, we're one of the few states that prohibits that from being in court. That information on whether the person had a seatbelt on or not, that is a significant factor in rates being high, and that's something that I feel confident we'll tackle that in this session too. And there's a lot of other legislators that are helping with this problem, and I commend them. A lot of bills filed, and we'll just see what makes it to the governor's desk.
Look, I don't think there's any dispute that the auto insurance rates in Louisiana are high. We're one of the highest in the nation. So I think we've really identified the problem. Now we got to work on a realistic solution. We got to find a solution that's based on actuarial data, and I think we can do that. Now, some of the bills that we have lined up for this session, I'm not sure, even though they're under the guise of trying to lower auto insurance, I don't think they really do. And if you look at the Louisiana Insurance Task Force that we had last year, it pretty much supports that. So what we need is some common sense measures that's going to lower auto insurance, but not get into this rhetoric of getting attorneys versus insurance companies and all these other issues that really may have no effect on the lowering rates.
What do you feel is the best path?
Well, look, I think it's a holistic approach. I mean, one, we certainly need to fix our roads. I think our roads sometimes contribute to accidents. But I think we need to do some things. We can look at things like lowering credit. I mean, not using credit scores in factoring auto rates. Because what I think happens is when you use the credit scores, we have people that may be good drivers but may have poor credit. And we're just basically pricing them out of the market. So what are they doing? They're not buying auto insurance. And if they're not buying auto insurance, then it's making it higher for everybody else. If we could get in on a lower rate where they could come in, it's almost like health care. If you get healthy people into the system, then for the people who file claims who may be unhealthy, it really brings it to the middle for everybody. And so what we're doing is, instead of having good drivers in the system because of their poor credit, we may be keeping them out of the system. We need good drivers to come into the system, lower the rates for everybody, and we reach a happy medium.
I suppose I was invited because I've worked on a few projects in the last few years that involve issues that are important to Louisiana today and have been for a bit. The tort system and affordability of automobile insurance and risk-based pricing. I think these projects are all quite relevant. So I want to start out by kind of setting the table. I know that you'll have some other folks talk on some of these topics, but I think it's important. I'll get a little wonky on you and talk about the economic role of a tort liability system. And this is important to understand before you can really discuss making any changes to your tort system. So you've got these two, not necessarily competing, but certainly different roles of optimal safety and optimal compensation. These are the two things that a tort system is supposed to do. So under optimal safety, the goal is to make tortfeasors. That's one of my favorite words to say. I don't know why, but I like to say tortfeasor. But it makes tortfeasors responsible for every dollar of harm that they cause. And this should affect their behavior and cause people to behave in a way that makes society safe. It does, though, ignore the cost of getting money through the tort system. It assumes that full responsibility is the most important part of being able to sue someone. It, again, assumes that this tort system is not a good or service that should be subject to the laws of supply and demand, our economic forces. The other side of this, there we go. The other side of this is optimal compensation. The compensation goal recognizes that the tort system is really kind of like insurance, that consumers pay for this insurance because the cost is embedded in the price of goods and services that you buy. A rather old number now, but one that I don't think has decreased, is for every new car you purchase, about $500 of that is what you pay for the right to sue the manufacturer of that automobile if something in it malfunctions. Every child that is born, about $2,000 of that medical cost is so you can sue the obstetrician or the hospital or the anesthesiologist or whoever's working on that if something goes wrong. And it also takes into consideration the transaction costs, which is kind of like the loading cost and insurance premium. And we recognize that consumers don't demand first-party coverage that has full coverage. Those of us in the business know that's because it would be way too expensive. We don't want very small losses to be covered because of the fixed administrative costs. We don't want losses to be covered that would be intentional, things like that. So no one goes to their insurance agent and asks for a first-party policy, or if they did and they heard the cost, they would decide they didn't want to buy it, that would pay for these things. And the other part of the tort system is non-economic damages, pain and suffering. Who here has bought an insurance policy, first-party policy, that pays you if you have pain and suffering? No, we don't have those. Now, if people wanted them, if I thought I could sell that and make a profit, I'd start that company tomorrow. Go out and make a fortune selling people pain and suffering policies. Oh, you're a little bit sad. Let's make a claim. That would be really hard to do, though, wouldn't it? It'd be hard to run that company. And it doesn't seem like there's a demand for it. Nonetheless, our tort system provides full coverage for economic and non-economic damages, no deductibles, no limits, no exclusions, and it has quite a large loading cost. How large? Well, this is from our paper on the cost of the tort system, our 2018 study, which I think uses 2016 data, and this is a national number. And this divides up the compensation paid to each part. So you've got the cost of risk transfer, the cost of, that says plaintiff's legal costs and defense legal costs, And that leaves some portion, about 57%, that goes to the injured plaintiff, or the plaintiff that's claiming to be injured. So if we're splitting up the tort dollar, you've got the plaintiff gets 57 cents on the dollar. In other words, they pay $1.75 for every dollar they receive. The defense legal is estimated around 13 cents, plaintiff's legal around 18 cents, and the cost of risk transfer is about 12 cents. That's the insurance company's cost that don't include paying for a legal defense, the claim adjustment cost. Now that changes by line of business, but this is the overall average. I think the important number, though, is how this breaks down, where the injured person gets 57 cents on the dollar. If faced with this contract in a market, and this isn't unlike some types of insurance, you might expect to get back 50 to 60 cents in claims for every dollar you pay in premium, but people demand to have limits, they demand to have deductibles, they demand to have exclusions in their policy which keep the policy from costing too much. These things don't exist in the tort system. So if we think about a spectrum, kind of a pendulum that swings back and forth in the public policy arena, the reason why we see from time to time different bills being proposed for what we call tort reform, or these bills being struck down, is that our tort system can kind of swing back and forth between being too stingy and too generous. We want this civil justice system to be right in the middle of what we'll call equilibrium. Now, when something like, it's not a new buzzword, but I hear it a lot lately, hadn't heard it much since the 90s, but social inflation, this idea that it becomes okay, different juries and such become okay with awarding more dollars, that courts decide that insurance policies cover things that plain language doesn't allow. These things we call social inflation can make the pendulum swing out towards generosity. And so then naturally, citizens would want something like reform to bring it back to equilibrium. The next section of my talk, I try to apply some of this to your automobile insurance system, something that I understand is of great concern in your upcoming legislative session. And we'll talk about where it might be on that spectrum between stinginess and generosity. So, I'm visiting here. I'm an interloper. I'm not a Louisianan, but so I can't tell you exactly which policy levers to pull to fix this. I have read through a number of the proposed legislative bills that are up this year, and think you're probably on the right track. But again, this is something that's much better for people on the ground and kind of know what's driving this in the court system and in the civil justice system. But I want to try to show you where you are on this stingy to generous spectrum. First, we should look at what do you pay. And, well, this doesn't come out very clear. I've got a nice little outline of the state of Louisiana there where you're ranked. Okay, you can see it better over here. But in premium per car, I'm looking at the average over the 15 years from 2000 to 2015. This is from some NAIC data that looks at data that are completely developed. So we know 5 years after a loss has happened how much it cost. And the average over these 15 years, Louisiana is number 3 in insurance premium per car. It's around $600. This is just for the liability section of the policy. And in each of these slides, I also show a median and the lowest. So Missouri is the median with about $300, so about half what Louisiana is. And the lowest is North Dakota at $200. So just looking at this, we could conclude that your insurance companies are just ripping you off. You've got these really high premiums, and of course that's who sets the premiums? The insurance companies do. So why are they ripping you off, or are they? The next thing we need to look at is what you get for what you pay. Insurance losses per car, much like football, Louisiana is number one. The loss per car is about $550 with $600 of premium. That's an average over 15 years. In a number of these years, the losses actually exceeded the premiums without taking into consideration any expenses. You've also got a median and lowest, and that looks like a North Dakota, but I can't read the other one, but it doesn't really matter. The idea is that at first glance, it looks like Louisiana has the highest premiums because they have the highest losses. We're starting to find some clues as to how we could fix this. Now, what about price? I'm going to define price as the premium divided by losses. In this case, you're number 49. You've got the lowest or the second lowest price. Georgia has the lowest price. Louisiana has the second lowest price, meaning the difference between your premiums and losses. So you pay the least per dollar of loss. So this is great, right? That problem solved. Let's all go home. Unless you're not happy with what you're getting. Unless you're willing to give up some of this largesse of premium dollars that are paid in order to not pay quite so much for your auto insurance. The highest price there, I think, is worth noting is Massachusetts, with Arizona at the median. So with these really low prices, the insurance companies maybe aren't doing so well in Louisiana, and indeed, that's the case. This is 6 years, 2012 to 2017. And this is also from an NAIC report on profitability. If auto insurance were too expensive because the insurers were price gouging the consumers, we would expect to see huge premiums or huge profits in auto insurance. In the most recent 6 years for which we have data available, there's 1 year where you broke even, and then 5 years where there were losses. Well, you might say, well, by any measure, that's bad. That's not a healthy market where, on average, the companies are losing. But you might say, is this just a few companies that really aren't good at what they do? Maybe they shouldn't be in Louisiana anyways. They don't know how to underwrite insurance. Well, here we have the percentage of automobile insurers with a loss ratio less than 70. A lot of people say that 70 is about the place where just between that you've still got to have room for expenses and an automobile insurance premium. So if your loss ratio is less than 70, you've got a chance at breaking even or making a profit. And this, again, is over several years. I think this goes 1991 through 2018. These are the companies the percentage of companies in the market that have a loss ratio less than 70 or that could be profitable. That red line is half. So in all but 2 years, more than half of the firms have probably taken a loss on auto insurance in Louisiana. This isn't a limited thing where a few companies do really bad and the rest are just making out like bandits. Full on half of these companies are probably losing money or coming very close, struggling to break even. So let's see if we can button this up. What's causing this? Why does auto insurance cost more in Louisiana than in other places? We know what doesn't increase the cost of auto insurance, but what does? And what I would offer is litigation behavior. So here we have another instance where Louisiana is number one. This metric is the bodily injury claims to property damage claims ratio. It's often used as a measure of how likely people are to sue over an automobile accident. So property damage claims represent, for the most part, the universe of possible bodily injury claims. You generally have to have some damage to the car before you're going to have damage to the people inside. And it's not until you have bodily injury that you can get the pain and suffering and such that makes it really worth filing a lawsuit. So in Louisiana, more than half of all property damage claims are litigated or have bodily injury, and so they are eligible for litigation. So if we assume that the average car crash in Louisiana is not crashed any better or any worse than the average car crash in other states, which I think is a safe assumption. We can control for a few of these things. I don't think we'd see a big difference in the outcome here. But this willingness to file lawsuits is likely a big part of why the automobile insurance costs so much. More lawsuits, higher costs. Of course, before we can address the difference across here, we also want to know, why is it that people are so willing to sue in Louisiana? Well, here's another one where we look at what you get when you file a lawsuit in Louisiana. This is bodily injury severity to property damage severity. So the average amount that's paid out, or the dollar of bodily injury for the dollar of property damage. It's a measure of the generosity of the tort system, and here you've slipped a notch to number 2. The people in Louisiana sue more because they get more when they sue. This is pretty simple economics. People prefer more to less, and when given a chance, it's pretty rational to, as an individual, to take what's available. So most types of tort reform address one or both of these things: the frequency of claims, adjusting people's incentives to bring a lawsuit, or adjusting what you get. So you've got an incentive which drives frequency, or an amount that you get which is what's behind that incentive to drive frequency. So I think that some of the bills that have been mentioned, that I've read about on the government website, would probably address this. Again, it's a little bit outside of my expertise, but if what people are claiming is true, then this is the problem you have to fix, and those are probably some pretty good solutions to fixing it. Something that I've also noticed, just following this, some of the political debate and some of the other bills that are being proposed, is that there are a few more things that are not going to fix your problem. And this is more along the lines of the work I've done on affordability and risk-based pricing. So some would argue that insurance would cost less if insurance companies would stop using certain variables. That's frustrating. That shows if they just didn't use credit or occupation or education or gender or whatever it is, that insurance would cost less, and that's simply false. That ignores the way that insurance is priced, and it's put out there because a lot of people will emotionally grab onto this. I used to work as a legislative consultant, and when I was living in Arkansas at the time, and the legislature had term limits, and we called that in the legislative consulting business an annuity, because we always had some new person in the legislature that came in and said, "Oh, credit scoring for insurance? That's obviously wrong. I'm going to pass a bill. I'll easily pass this bill that will get rid of it." And it turns out that you get to go and explain that to them, and well, there was never a lack of work. So this is something that insurance industry critics like to put out there because, again, it's an emotional It's an emotional call to pile onto the insurance industry. But eliminating accurate rating variables only makes prices less accurate. And on average, it increases the price for everyone. And I think most importantly, it reduces people's incentive to drive carefully. One of the reasons that I don't drive really fast, because I'm often in a hurry, and I feel like I'm a good driver. Everybody here is an above average driver, right? I used to ask my class this, and every single person believed they were an above average driver. But I think it would be pretty safe if I drove 100, 120 miles an hour when I'm trying to get from Tuscaloosa to Birmingham and I'm late. The reason why I don't do that is not because I'm afraid I will crash. It's because if I got a ticket going that fast, the cost of auto insurance would double, and that's a significant cost. This is one of the societal benefits of insurance and the way we price insurance, is that it causes people to take care. So when we have people that are dangerous drivers, when they have this financial incentive to drive more safely, it saves lives. But what people want to see are these observed driving behaviors. Your driving record are the only things. That's the new bill in Congress, the PAID Act, that they're actually having a hearing on right now in Washington, D.C., that would eliminate 12 different rating factors for automobile insurance. They say that the only thing that should matter is your driving record, how many times you've crashed, and how many speeding tickets you've gotten. Well, here's the thing about observed driving behavior. It doesn't give us a full view of the risk. It's like in the picture, the person is looking through the wrong end of the telescope. They're not seeing much. Unlike the other variables that are frequently used to rate auto insurance, the problem with, for example, your loss history. Let's take our very riskiest class, our very worst drivers, the teenage males, the 15 or 16-year-old, whatever the first year is that you can get your driver's license. The young man in his first year of license driving, there's a 20% chance that he's going to crash that car. 20, yeah, that's terrifying, isn't it? I'm looking at people that probably have a 14-year-old son out there. They're just kind of, their knees are knocking, and they're thinking, "Oh God!" But that's the number. That is the number. There's a 20% chance they're going to crash. But if all we look at is their crash history, over that first year, we will correctly classify 20% of our very worst drivers, who we know, we have a lot of data that shows they are our very worst drivers. In fact, this is something that's happened in several states as gender has been eliminated as a rating factor, that at least through age 21 or 25, it has increased the price of auto insurance for young women by a huge amount. Because, well, I can't tell you why, but I don't think it surprises anyone to know that young men crash their cars more than women. So if we only consider driving record, we're not being very accurate, even with our very worst drivers. But our average driver, this is even worse. The average driver in the United States crashes their car. There's about a 3.5% chance each year that you're going to crash your car. So if we're only looking at driving record, at the losses you've had in the past, we're going to misclassify 96.5% of all drivers. That's not a very accurate rating system. That's not going to get people to act as though they have these incentives, these financial incentives that happen through the insurance system to not crash their car. In addition, the data on tickets that people get, and to some degree, the data on losses people have had, the crashes that have happened, are notoriously spotty. There was a study done several years ago that audited driving, what do we call them, the driving citations that people get, and found that something like 25% to 30% were not accurate. You know, about 80% of all statistics are made up on the spot. But I'm pretty sure that was the number. It was somewhere around 25% of the Department of the one that gives you your driver's license, Department of Motor Vehicles, doesn't have all the data about the tickets you get. Now, unlike loss history, the credit-based insurance score is a continuous and consistent variable. What do I mean by that? Well, it's not just a yes or no question. It's something that your insurance-based credit score is some number, depending on which company you're with, it goes between maybe 300 and 800, or you can set the scale any way you want to. But there's a lot of places to stop in between the top and the bottom. It's also something you know immediately. When you rate someone's insurance, you don't have to wait during the year to see if they crash or not, to see if they get a ticket or not. And so it is very, very accurate. These graphs that are unfortunately hard to see are from a study that was done by the Federal Trade, the FTC, the Federal Trade Commission, in 2007. And what they do is there's this red line that shows the correlation between just your insurance-based credit score, your credit-based insurance score, and the amount of losses you have for 4 different types, the property damage liability, bodily injury liability, collision, and comprehensive coverage. And then the blue line that you really can't see, which is very close in most cases to the red line, is how much that changes when you add in all of the other variables that we use to rate automobile insurance. It shouldn't surprise us that a credit-based insurance score is the most accurate, or among the most accurate and consistent predictors of automobile crashes. And this is the same, while not as predictive, things like age, gender, mileage, location. These are all things that we know immediately, and they don't change much. You know, your age changes every year. Your mileage could change a bit. But we know when these things change. Another thing I've seen in Louisiana is some concern over gender and marital status. I looked into this and I looked deeply for some data and for some information. And what a lot of the sources say is that these are largely proxies for mileage driven. In the past, it's been very hard to determine how far someone drives. You look at the application for insurance that you fill out when you're shopping your policy, and it asks, maybe, do you drive more or less than 7,000 miles a year, or 10,000 miles a year? It's a very coarse measure, but it's also one, when it's been audited, has been, well, a lot of people forget how much they drove last year when they're filling out their auto insurance application. And so it's not incredibly useful to the insurance company. As technology makes that easier to follow with these apps on your phone and the dongle you can plug into your car, then things like gender and marital status become less important for rating, which is nice because I don't think that mileage driven is nearly as controversial as these other things that we have less control over. Also, what we've seen is a shift in kind of demographics and social norms that have decreased this gap in how much. It used to be that men drove a lot more than women. It might be because, well, when you get in the car for the family to go somewhere, dad drives. It's not really such a thing anymore. Maybe more so than some, but it used to be that if you weren't married by the time you were out of college, then maybe you never would be. Now people wait later in life, and it's much more common. The number of miles driven by each gender has mostly converged. So we see this having a somewhat different effect on the price of auto insurance. But one thing to note is that a change in marital status is probably going to cause a change in mileage if you and your spouse generally went places together, because there's two people in one car. And one person might be driving or the other, but there might be an increase in your expected losses as an individual if you're driving yourself everywhere you go. Again, this is something that we have the technology to address. Paying for insurance by the mile or just having an accurate measure of mileage would do away with these concerns, I believe. So to kind of sum this up, and well, nobody's ever been upset that a talk didn't go long enough, but I'm happy to take some questions. As we roll through these last few slides, the problem of banning accurate rating variables is that prices become less accurate. This is important, and why it's important is that we don't really want to help bad drivers stay on the road by sharing the cost of their crashes. Every time that we say, hey, we know this is an accurate rating variable, but we just don't want to use it, what we're saying is we want good drivers to pay more so that bad drivers can pay less on average. Maybe that's okay with you. Maybe you think, well, there's really not that big a difference in people's ability to drive. I beg to differ. I'm one that doesn't ever text while I'm driving. I'm too busy looking at other people so I can judge them for texting while they're driving. But I can tell you that a lot of people drive very distracted, and that's a big reason why they crash. That's just one of the ways that a person can be a bad driver, and that's one of the ways that people differ. I also know a lot of people who won't answer their telephone while they're driving, even hands-free. They'll pull over. They don't look at it, even if they get a text from somebody they like, they don't pick it up. These are your good drivers. They might not, and in some cases it might come down to eyesight or reflex speeds. But at any rate, when prices become less accurate, people die. Oh, am I being alarmist? Am I just trying to get a reaction from people who think everyone should pay the same for their auto insurance? No. When people have to internalize the price of their driving, of crashing their car, the risk they pose to society, then at the margin they are going to behave in ways that minimize that risk and that cost. Now, a lot of people will tell you when they're talking about automobile insurance rating that, well, you shouldn't rate somebody based on something that they can't control. You can always control how you drive. And if you do that and everybody else in your class does that, then it will no longer be a rating factor that's accurate. And that's, I think, a pretty good reason to use accurate rating variables. But what we've seen in a number of studies, when you specifically allow cross subsidies in automobile insurance rating, for example, there's been several distinct breaks in Massachusetts when they decided that insurance costs too much, and so they made everybody that doesn't live in Boston pay for everyone who does. Immediately what you saw was a lot more crashes, a lot more injuries, and a lot more fatalities for the people who were being subsidized, and a lot less driving by the people who lived in the suburbs that felt they were being overcharged. They maybe got rid of a vehicle that wasn't necessary to their family because it was expensive. So you've got the perhaps better drivers, people less likely to cause a crash, are staying home or not driving as much, and you've got the people who are the most dangerous are out there driving because, hey, this stuff's almost free compared to what it cost before everyone else started paying for my auto insurance. So my standard answer People say, well, why do insurance premiums need to be accurate? I say because inaccurate insurance premiums kill people. And I'm right. Thank you. The message today was about Louisiana's tort system and the cost of automobile insurance. Tried to point out a few things that could maybe change and make the insurance cost less, and I think that's something folks in Louisiana would appreciate.
Okay, where does Louisiana rank when it comes to auto insurance, and why are the prices so high?
Actually, the prices are very, very low if you define price by what you get for what you pay. The premiums are the highest, or the second highest, but the losses are the very highest, number one in the country. So while it costs a lot, the losses are very high, which means the price is very low. Now, as far as cost, you're third. The cost is very high, and because the losses are very high.
Okay. Why are the losses in Louisiana so high?
That's a great question. I don't have a crystal ball that can tell you exactly what changes the cost, but based on the evidence we've seen, it's because the tort system, the way people litigate over automobile accidents, is substantially more active than any other state in the country.
What's your recommendation to Louisiana to be able to reduce that?
Well, I'm not an expert on Louisiana. I'm visiting here from Alabama and happy to be here, but there's a number of proposals going around. Anything that reduces the frequency and severity of litigation would put Louisiana more in line with other states.
I refer to it as the soft tissue industry. And it's not just the lawyers. And in defense of the lawyers, I know that's not a popular thing to do, but the TV ads that you see promoting so-and-so got me $300,000 or $500,000 or $400,000 or even $175,000. Those aren't the problem. It's just what the gentleman just talked about, the fraudulent soft tissue industry that consists of not just lawyers, but also doctors, physical therapists, chiropractors, who are all necessary parts of that process. And when they get threatened by tort reform, they show up through their lobbyists in the Capitol, and they are much more. The auto industry is who the lawyers point to as being the evildoers in the system. Truth is, auto insurance is a cost-plus business. Whatever the losses are, they are allowed actuarially to project their future losses based on their last 2 or 3 years of losses and add on to that a profit margin. In Louisiana, on average, it's 7%. Nationally, on average, it's 8 to 9%. It's a little cheaper in Louisiana because our prices are so high. Second highest cost of insurance, 49th highest per capita income. 45% of our drivers are driving with minimum limits of insurance. Another 12 to 15% are already driving uninsured. The 45% are just hardworking, law-abiding, working poor, as we call it. They're just doing what the law requires them to do to drive to and from work, to get their children to and from school, what have you. And the real abuse in the system isn't those $300,000 jury verdicts, because all of those go to a jury. It's in the plethora of $15,000 checks that are handed out like cotton candy because, frankly, the company, the insurer, cannot defend it for less than $15,000 that they hand out instead. We know how to fix the problem. Jury threshold is, in my opinion, the most important part of the proposals that are being put forth, because the system is skewed politically by jury threshold. You don't have the right, which the judicial system has always trumpeted, that it is based upon your right to a jury of your peers to resolve your dispute with whoever is suing you. That has been bedrock judicial belief throughout the history of the U.S. But the jury threshold in our state defeats that, runs contrary to that. You have an elected judge sitting in judgment of one of his voters, one of his constituents, being brought to his court to decide whether his soft tissue injury is real or not. a bit of evidence in testimony to that effect. The other, direct action, it is only there to prejudice the outcome. They can name the insurance company. They don't just have to name the driver who caused the injury. 3 states have that, us and 2 other states, and it has no purpose other than to communicate to the trier of fact, the judge or the jury, that look, you don't have to worry about giving some extra money to this plaintiff because it's coming from that big bad insurance company out of Illinois or Texas, and it won't hurt us here in Louisiana. Wrong. It does hurt us, and to your original question, what do I think the chances are? The chances are excellent. The reform package this year will pass. I don't know by how big a majority, whether it'll have 69 votes like it did last year, but that committee that killed Senator Hewitt's bill and Senator Talbot's bill last year and the year before, 2 of those senators are no longer with us in the legislature because they served on those committees, on that committee, and killed those reforms. You know, one thing that I've learned in my political career is that nothing is more important in politics, not money, not name recognition, not ability to articulate or what have you, than timing. And timing is on our side. It became a major issue in the governor's race and in every legislative race this past round of elections, just like property insurance was in the aftermath of Katrina and Rita. And we fixed that as a result of legislators knocking on doors and being told by every one of their constituents, you got to do something about this insurance crisis in the homeowners market back in the aftermath of those hurricanes. We did that because they helped us do that. And now they're being watched and lobbied to fix this broken system, and I truly do believe it will happen this year. And by the way, I said that last year when I was campaigning, and I said, I don't care which of the 3 candidates for governor gets elected, whoever gets elected, the legislature is going to pass the bill, and it will become law, I do believe.
What steps do you recommend that the legislature take?
We have really, frankly, a rehash of measures that have been put forth in years past. Jury threshold being the first one that is a reform of our tort system, direct action. I'm primarily focused on the 3 that we are different than almost every other state in. The jury threshold of $50,000 is, there's only 13 jury thresholds states in America. It's far and away the highest. Second is Maryland at $15,000. The other 11 are $5,000. We propose going down to where those 11 are. Direct action is we're one of 3 states. When we're one of 3 states and we have the worst cost of auto insurance, we need to do things like the other 46 states or 47 states are doing. Another is our prescription period. The trial lawyers have always pointed to that, never been willing to trade one of the reforms that we've proposed for extending the prescription period from 1 year to 2 years. I'm supporting that because, again, we're an outlier. They say it drives claims to litigation because we have the shortest prescription period in America. Let's try it. Let's change that as well. And unmasking the fact that a driver or that a victim of an auto accident wasn't using his or her seatbelt. And by doing so, we will put more fairness in the rewards that victims of accidents receive.